PayPal stock just reported earnings, and as you can see, they were very bad as the stock is down 15% pre-market. And this is a stock that is already down 78% in the past 5 years and 40% in the past year. Full disclosure, I am a shareholder of PayPal, so I'm going to give my thoughts. They also removed Alex Chris, their CEO, and appointed Enrique Lores as a new CEO, so we'll talk about that later. And let's start with the key financial results. Now, as you can see here, revenue came in at $8.6 billion, which meant 4% year-over-year growth. So analysts were expecting more. Now, I will say this is only 4% because as we take a look at the quarterly revenue, last quarter it was a very strong quarter for PayPal as they did $8.3 billion. So year-over-year growth would be higher if this, for example, was $7.8 billion. But nevertheless, this is still very low growth. Now, total payment volume was up 9% year-over-year, which is great. And also transaction margin 3%. Adjusted free cash flow came in at $2 billion, which is up 3% year-over-year. So still very low growth in a lot of aspects, and people were expecting much more. Now, as far as account and activity metrics, active accounts were up 1% compared to last quarter and 1% compared to the year prior. Monthly active accounts up 1% and 2% compared to the year prior. And number of payment transactions up 2%. A slight positive is that transaction per active accounts came in a 5% growth, which is good. However, again, their financials were not great, and I think investors are wondering, is PayPal going to become a declining revenue growth and profit growth business? Now, as far as their guidance, they are expecting a slight decline in transaction margin, which is not great. However, they are expected to make in adjusted free cash flow more than $6 billion, and last year they made 5.5, so it would be a lot of growth, and also $6 billion in share repurchases. This is huge for investors because you own more of the company and you share the profits with less people. This is going to drive EPS massively in the future. However, I know earnings are horrible. They appointed a new CEO, but let's take a step back because earnings are just one quarter. And last quarter, for example, PayPal reported an amazing quarter and people were super hyped about it, and now people are selling everything. So let's take a step back and be calm about it. Now, PayPal's revenue has still seen growth in the past decade and they are still growing. They reported 4%. If PayPal grows at 4%, the returns would be huge. Now, let's take a look at free cash flow. As I've said, they guided for $6.5 billion and last year they made $5.5 billion. So they will still have a lot of growth in free cash flow. Their margins are still good, gross margin at 41%, and free cash flow margin is at 16% currently. And like I've said before, they are also going to keep buying back a ton of shares, which is going to drive EPS and is going to be huge for investors. Now let's take a look at some statistics. The market cap is $48 billion. Now, if the stock opens at $44 per share, because also in pre-market there are a lot of trades, so keep in mind that the current market cap would be, or the new market cap would be $40 billion. And also, if we take a look at the valuation, the current price to free cash flow is 8.8. So again, with a drop of 15%, the new price to free cash flow would be around 7.5, which in my opinion is dirt cheap. Now, in order to determine what returns we would get on PayPal, I use a DCF model. This tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $65 per share, middle 92, and high 128. Now, if the stock opens in the market at $44 per share, it means that if my low assumptions occur, you would get a 17.5% annual return on your money, middle 25%, and high 32.5%, which is huge. Now, as far as my assumptions, I assume PayPal grows revenue between 3 and 7%. Keep in mind they are still growing at 4% in a bad earnings report. They're averaging a profit margin and free cash flow margin between 12 and 16%. They are currently doing 16%. And I assigned the PM price to free cash flow at the end of the 7 years of 14, 16, and 18. If you want to make your own assumptions, I'm going to leave a link to the spreadsheet down below. Super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. And while it is true that their earnings were very, very bad because they came in at $1.23 per share versus analyst estimates on $1.29, and revenue came in at $8 billion.68, while analysts were expecting $8.79 billion. And I also liked Alex Chriss as a CEO, and I thought he was doing a very good job. We have to take into account that PayPal is still a growing company, it still have a lot of cash, and they are buying back a ton of shares. I am still bullish on my thesis about PayPal, and it is true that I would have liked much better earnings, but I think the company is just dirt cheap at the moment. And on earnings, people tend to make rash decisions. Last quarter, PayPal jumped around 10% because people thought that PayPal was going back to all-time highs. And now, because they missed, it seems like PayPal is going to go to zero and people are selling everywhere. I always like to look at the long-term potential of companies, and I think it's too early at the moment to say PayPal is a dead company or PayPal has turned things around. I still think we need to see a couple more quarters to see what happens. And I still have to go through their earnings again because I just did a quick overview and listened to the call. But if the stock trades in at $44 per share when the market opens, at this time, I'll just probably buy more shares. I hope you found this video valuable. Let me know what you think about PayPal stock in the comments, and I'll see you in the next one.